We at Great Lakes Hybrids have been serving generations of farmers with outstanding service, the latest technology, and new yield-producing proprietary genetics. We're happy to partner with Farms.com Risk Management to bring you this latest market update.
Welcome to the Farms.com Daily Market Commentary for April 12, 2011. This is Michelle Lamerin, Commodity Research Analyst for Farms.com Risk Management. According to the USDA's latest crop progress report released on Monday, April 11th, U.S. winter wheat conditions based on the average of 18 states for the week ending April 10th was 36% in the good to excellent category. This is 1% lower than last week and 29% lower than last year's 65% rating in the good to excellent category. 36% of U.S. winter wheat was rated very poor to poor versus 32% last week and 6% last year. 28% of U.S. winter wheat is currently considered fair compared to 31% last week, as you can see from the chart behind me, and also those attached in the text version of today's daily. Only 11% of winter wheat in Texas was rated good, while no Texas wheat received a rating of excellent. This compares to 12% last week and 58% last year. 28% of Kansas winter wheat was rated in the good to excellent category versus 31% last week and 69% last year. Winter wheat in Oklahoma was rated 11% in the good to excellent category compared to 16% last week and 71% last year. U.S. corn is 3% planted according to the average of 18 states as reported by the USDA versus last year at 3% and the 5-year average of 3%. This was slightly lower than expectations of 4%, and Illinois' plantings were 4% complete versus 1% complete last year. Iowa and Nebraska plantings were 1% complete versus 1% and 0% last year, respectively. So bottom line, the big wildfires remain out of control in Texas. The wheat market has begun a battle with the weather bulls versus a lagging export demand picture. Winter wheat crop conditions continue to deteriorate, but this may have already been discounted by wheat futures for now as the market was near-term overbought, as you can see in the 2011 July Chicago wheat daily futures chart as attached and behind me here. U.S. corn plantings were consistent with the 5-year average. The only producers really planting in the U.S. are those producers with sandy soil. It's too early to plant in Iowa, Michigan, and Illinois, as weather in the U.S. Midwest is expected to be wet and cool this week and into early next week, further delaying corn planting. The weather forecast calls for more rain and snow mix in the coming 3 to 4 days and cooler temperatures as well. If this occurs, planting could be delayed another 7 to 10 days. The states of Iowa, Illinois, Nebraska, and Minnesota account for more than 50% of total U.S. corn production. Other major corn-producing states in the U.S. include Indiana, Wisconsin, South Dakota, Michigan, Missouri, Kansas, Ohio, and Kentucky. In other news, Analyst Solaris is estimating that the Brazilian soybean harvest is 77% complete, up 10% from last week, but lower than last year at 81% complete for the same time period. According to Barclays Investment Bank, the average wheat price is forecast at U.S. $7.64 per bushel, while corn is forecast at $7.60 per bushel and cotton at $1.70 per pound. Rabobank and Goldman Sachs are among a handful of other analysts that believe a bushel of corn may become as valuable as a bushel of wheat, the first time this would occur since 1996. Strong domestic use and competition among users are cited as the foundation for this projection. Rising water levels in the Mississippi River will likely lead to the closing of at least 4 locks, according to the U.S. Army Corps of Engineers. If this occurs, it will have a significant impact on shipments that routinely use the river. Mass graves of 1 million of improperly buried animals affected by foot and mouth disease have affected groundwater supplies in South Korea now. And crude oil is falling today as the International Energy Agency and International Monetary Fund said that prices above U.S. $100 per barrel are starting to have a negative impact on the global economy. Goldman Sachs forecasts a substantial correction after the IEA reported signs of lower demand and the IMF cut its growth forecast in the U.S. and Japan, which are 2 of the world's 3 largest oil consumers. The London commodity team of Goldman Sachs issued a publication suggesting that commodity prices could reverse and recommended that their clients take profits after its recommendations gained 25% in just 4 months. This statement is actually quite misleading, as in actuality the commodity they are talking about is crude oil, not all commodities. The Japanese nuclear situation has now been upgraded to a level 7, the highest possible rating and the same level as Chernobyl. However, the Japanese plant is emitting radiation at 10% of the level seen at Chernobyl, but far-reaching low-level radiation has now affected drinking water, vegetables, seafood, and more. And lastly, crop insurance premiums are estimated to have hit a record $11 billion this year, covering 266 million acres, which is up from the previous record of $9.9 billion in 2008. That's all for today. Have a great day.